$1,000 into $100,000. What if 10 years ago you had only about $1,000 to invest? What location would you have placed it? Into the stock market? Perhaps into Bitcoin before anyone thought it was real? Interested in real estate, which has always been a source of prosperity? Or would you have opted for the supposedly safe haven asset, gold? In actuality, your decision might have fundamentally altered your financial future. It could have barely kept up with inflation, or that same $1,000 could have grown into six figures. We'll examine the performance of four well-known investments in the past 10 years, the risks they posed, and the lessons we may learn for the future in this video: index funds, cryptocurrency, real estate, and gold. Number 7, index funds, the reliable performer. The phrase, "set it and forget it," is frequently used to describe index funds, particularly those that follow the S&P 500. In comparison to the dramatic headlines about cryptocurrency or meme stocks, their average annual returns over the last 10 years have been 10 to 11%. This may not sound impressive, but it is by no means disappointing. Today, a $1,000 investment would have grown to around $3,000 thanks to compound interest and reinvested dividends. Because index funds distribute risk among hundreds of businesses, which represent nearly the whole U.S. economy, this expansion occurs with much less stress than in other markets. The stability of index funds is just as powerful as their return. Even though there were sharp dips, like the 2020 pandemic crash, the market bounced back and continued its steady climb. Because of their dependability, index funds are frequently suggested by financial professionals as the cornerstone of any long-term investment plan. Number 6, crypto: the wild rocket ride. In this race, cryptocurrency is unquestionably the hare, and not just any hare, but one attached to a rocket if index funds are the turtle. The star of the investment world this decade has been Bitcoin in particular. At its peak, it was valued tens of thousands of dollars per coin. However, in 2015, it was only worth a few $100s. In certain periods, the annualized returns were even higher than 70%. This implies that your money could have risen to well over $100,000 if you had invested $1,000 in Bitcoin and held on to it through all the turmoil. The harsh reality, however, is that very few investors had the forbearance to endure the violent crashes, in which Bitcoin repeatedly lost between 70 and 80% of its value. It is impossible to overestimate the emotional cost of such volatility. Many people missed the bounce after selling at the low. The potential for life-altering profits combined with the very real chance of losing almost everything is what cryptocurrency demonstrated to us as the extreme side of risk and reward. Number 5, real estate's slow and steady wealth builder. In the realm of investing, real estate has long occupied a unique position. Purchasing a home is often the biggest financial choice a family will ever make, and it's not just about finding a place to live. In the past 10 years, the average annual growth rate of U.S. housing prices has been approximately 5%. Compared to the figures we've seen in cryptocurrency, that might not sound all that exciting, but keep in mind that real estate operates differently. In the absence of leverage, a $1,000 investment in real estate would have only increased in value by about $1,600 during a 10-year period. However, the majority of real estate investors use mortgages rather than only cash. This implies that you may manage a property worth around $200,000. If the property appreciates by 5% a year, you will receive even larger returns on your initial investment. That is leverage's power. In addition to price growth, real estate also produces rental revenue, which adds another level of profit. Therefore, even while it could appear gradual on paper, when leveraged properly, real estate is still one of the most effective ways to create wealth for future generations. Number 4, gold: the safe haven that barely moved. For thousands of years, people have valued gold as a store of value, and it continues to have a psychological hold on investors in uncertain times. However, the story is disappointing when you take away the fiction and examine the data from the past 10 years. Since gold only yielded 2 to 3% yearly growth, an investment of $1,000 would now be worth approximately $1,280. That is no more than what you would receive in a good year if you kept your money in a savings account. To be fair, the purpose of gold is to preserve your riches not to increase it. Gold is a hedge rather than a growth engine, since it typically holds steady or rises when other assets decline during times of high inflation or stock market disasters. However, when compared to equities, cryptocurrency, or even real estate, gold failed as a standalone long-term investment. Gold was not the solution if you were looking to increase your fortune. If you were looking to protect your riches, it was a discrete solution. Number 3, the visual backtest, a tale of 4 curves. Now visualize a single chart with all 4 investments displayed on it. Words cannot express the tale that the lines do. The curve for cryptocurrency is almost vertical, outstripping all other asset classes. Index funds provide a consistent increasing trajectory with predictable compounding over time. The consistent but far less dramatic rising trend of real estate's line reflects its slower rate of appreciation. In contrast, gold's line is essentially flat and only slightly rises over the course of the decade. The contrast between these curves is remarkable when viewed side by side. Depending on the asset class, the same $1,000 invested on the same day produced entirely different results. This graphic demonstrates that the decision about an investment is equally as important, if not more so, than the act of saving or investing. Number 2, the lesson on risk versus reward. Unquestionably, the comparison of these 4 assets teaches us that every investment involves a risk versus reward trade-off. We learn from cryptocurrency that you may achieve really high profits, but only if you can withstand the risk of losing everything. Index funds once again proved why they are the foundation of so many retirement portfolios by showcasing the beauty of consistent compounding with comparatively little risk. Despite its seemingly modest growth rate, real estate demonstrated the ability to use leverage and generate income in addition to price increase, making it a potent long-term wealth builder. Gold also showed that growth is frequently sacrificed for protection, providing little more than storm-proof value. Instead of following excitement or fear, investors can select what suits their objectives and tolerance by being aware of this trade-off. Number 1, what this means for the next 10 years. What about the future then? Can we guess who will win the big prize next? In actuality, no one can say with certainty. Cryptocurrency may continue to transform the financial industry, or it may collapse due to competition from central bank digital currencies and regulatory pressure. It is quite probable that index funds will continue to compound consistently, mirroring the long-term expansion of the world economy. Interest rates, supply, and demographic demand factors that have the power to make or break housing markets will all have a significant impact on real estate performance. It's conceivable that gold will continue to shine in times of crisis, but lag in prosperous times. The best lesson learned is to not place all of your money on one result. By holding a variety of different assets, you can protect yourself from catastrophic downside while increasing your exposure to upside. Even though the next 10 years might not seem like the last, the values of discipline and balance remain constant. So here's the bottom line. If you had put $1,000 into Bitcoin 10 years ago, you'd be celebrating a 6-figure windfall. That's the incredible power of choosing the right investment and the danger of choosing the wrong one. If you found this breakdown eye-opening, don't forget to like this video, subscribe for more financial deep dives, and share your thoughts in the comments. Tell us, where would you put your $1,000 today? Because the best investment decision you'll ever make might be the one you make right now.